So today let's talk about Gold Coast. Gold Coast, no doubt, is one of the hottest property markets in Australia right now. In the 3 years from 2021 to 2024, house prices increased by 56% in Gold Coast. And that is close to many cities' 5-year, 7-year, or even 10-year total growth. So in the coming few years, will Gold Coast continue growing? Let's try to find out with 10 charts across Gold Coast's property markets, economy, and demographics. But before we get into it, if you're interested in property investment, analyzing property markets with data, you're at the right place, because that's all what we do in InvestorKit. So if you like today's video, don't forget to like and subscribe. With your support, we'll be able to create more content like this and deliver them to you more frequently. So now let's get started. The first chart here we're looking at is an overview of Gold Coast's market performance. Price pressure and rental pressure are both high, indicating good growth in the short term. Rental yield here is at a balanced level. Comparing to the high house prices in Gold Coast, the balanced level is actually quite impressive. Affordability is obviously quite poor, as median house prices in Gold Coast is close to 1.2 million now. Incoming supply goes high because we are not seeing many new houses being built and coming to the market in the coming few years. And growth cycle-wise, Gold Coast is not actually at a favorable position in its market cycle. And now with the next 9 charts, I'll be expanding on each of these metrics respectively. Cool. So our chart 2 is the migration and population growth trends. Over the last decade, population growth in Gold Coast has been quite strong, averaging 2% annual growth or even higher. Before the pandemic, the internal migration and overseas migration were quite close to each other, meaning that the city was attracting people from other states and other countries kind of equally. But after the pandemic, things have changed a bit. Internal migration has been declining, most likely because of the quickly declining affordability, but at the same time, overseas migration is surging. So more people from other countries are attracted to Gold Coast than people from inside of Australia. But thanks to the surging overseas migration, population now is growing robustly. Over the past financial year, Gold Coast achieved 3% annual population growth. That was easily one of the highest across all Australian cities. And moving on in the coming few years, as long as population growth stays strong, we'll be confident that the housing demand will be staying strong as well. So what's attracting people to Gold Coast? Besides the lovely climate and weather and the cozy coastal lifestyle there, I believe one of the most important things is the thriving economy. So basically, Gold Coast has a lot of job opportunities to offer. You can tell that from 2 things. One is the low unemployment rate. Currently, the unemployment rate here is 3%. It is not only much lower than the 5% balanced level, but also the lowest point in over a decade in Gold Coast itself. And if we look at the number of job ads, we can also tell that currently the available jobs Gold Coast has to offer is almost double the number it had to offer 10 years ago. So with such an active job market, it's easy to understand why people are moving to this city. And now let's move on to the sales market. I was saying that price pressure in Gold Coast was high, and by that I mean the sales market pressure is high in Gold Coast. How can we tell? Well, from multiple indicators. The first one is data market. Data market is declining. Has been declining since mid-2023, and that means people are taking less time to making their purchase decision. They're basically more eagerly to buy than to shop around. And this downward trend is currently not stopping at all. We'll be seeing it continue declining in the coming 6 or 12 months. How do we tell that? Well, we look at the demand and supply relationship. Currently, the monthly sales volume is stabilized. However, at the same time, the number of supply is not. It is still declining, resulting in this decreasing inventory level. Currently, the inventory level is at 2.3 months of stock as of May 2024. And that is much lower than the balanced level of 3 to 4 months of stock, meaning that this market, the established supply is quite tight. And at the same time, we're not seeing a lot of incoming supply to come either. Chart 6 here shows that the number of new house building approvals in Gold Coast only takes 1% of Gold Coast's total house stock. That is much lower than the 2% balanced level. Usually the 2% is a balanced level for incoming supply. And with declining established supply, quite low incoming supply, and increase in demand, we are confident to say that Gold Coast's sales market pressure is quite high and still increasing. And that means that in the short term, Gold Coast is going to continue growing. But at the same time, there could be some factors limiting the growth. One of them is affordability, and the other is growth cycle position. Chart 7 shows Gold Coast in the past 10 years and in the past 5 years have both grown higher than the average level, meaning that it is well into one of its strong growth cycle. And usually this growth cycle position combined with poor affordability would limit any cities or any markets for the growth space. But for Gold Coast, it could be a bit complicated because at this moment, sales market pressure is still quite high. So what's going to happen in our mind could be that in the coming 1, 2, or even 3 years, Gold Coast's growth would still be quite healthy, but in the medium term, affordability may finally come into play and lead to a correction phase for Gold Coast's market cycle. And now let's have a look at the rental market. Rental market pressure, as I mentioned before, is also high, as we can tell from the vacancy rate. It is extremely low now at under 1%. And at the same time, rents have been pushed up by 7.5% in a year. And that is just the average level. In some subregions, the annual growth is even higher. Some of them had achieved another double-digit growth in the past year. If we look at the median rent of Gold Coast, we'll notice that it is actually quite high. Even the median price is close to 900 per week now. As comparison, Greater Sydney's median house rent is currently just above 700. That is much lower than Gold Coast's median rent. As a result, surprisingly, Gold Coast's rental yield is not really low at all. Usually, for a market with a median price of 1.2 million, rental yield would be somewhere around 3%. However, Gold Coast has 4% rental yield. And that is very close to Greater Brisbane and Adelaide's rental yield level, where house prices are much lower than Gold Coast. So the high rental prices and rental yields could be one of the reasons why housing demand is not pushed too much from the sales market to rental market as of now, because they are equally unaffordable. And in the long term, as we can see in this chart 10, Gold Coast's rental price has grown much more than the average level of big regional cities. And moving on, as rental growth slows down in Gold Coast, we would expect these two lines to get closer to each other. So to summarize, we have seen quite high market pressure in both the sales market and rental markets in Gold Coast. So in the short term, in the coming 6, 12 months or even 24 months, we are expecting the house prices to be driven up continuously by the limited supply and rising housing demand because of the high population growth. However, at the same time, affordability may limit the price growth a bit. And in the medium term, what we mean is maybe 3 to 5 years, we may expect a correction phase. It could be a period of stagnancy, or it could be some decline, like what happened in 2022 in Gold Coast, or what happened usually in Sydney, Melbourne, or these big cities after a really strong growth cycle. So, Gold Coast is the second regional city in our city by city market pressure review series. If you enjoyed today's video, please like and subscribe. And also, if you're interested in more content like this, check our channel or check the InvestorKit website, where you'll find blogs, videos, podcasts, white papers, everything data-driven. So, I'm Junge Ma, the Senior Research Analyst at InvestorKit. I'll see you next time.